Hello, welcome everyone to this panel on navigating the crypto trading landscape. I'm the panel moderator today. And for those who don't know me, my name is Samar and I work for a company called Talos. We are the largest provider of institutional crypto trading systems to firms on the buy side and the sell side. Enough about me though. We have some really great speakers here today. Industry heavyweights that I'd like to introduce. Michael Wu, the CEO and co-founder of Amber Group, and Darius Sit, the founder and CIO of QCP Capital. Thank you both for your participation.
Thank you. Good to be here.
Thank you.
Great. So before we get into the trading markets, I want to learn a little bit more about your firms for the audience. So maybe could you give us a quick overview of your companies and your mission and role in the digital asset space? Maybe Michael, you can go first.
Sure. Thank you. Thanks, everyone. Great to be on the panel today. As Samar introduced, Michael Wu, co-founder and CEO of Amber Group. Amber Group, we see ourselves as a leader in both digital asset wealth management and in crypto native liquidity solutions. What we do specifically is that we service basically two core client groups of ours. One is the crypto native projects, companies, or projects alike, where we provide not only liquidity solutions such as market making, treasury management, hedging solutions, and all things needed as it relates to the financial or trading needs in a both crypto native and highly sophisticated and professional way. On the other side, in our wealth management business, we then connect the asset class of digital assets, crypto, and the most innovative crypto projects, the tokens alike, to I will say the more sophisticated invest groups such as family offices, high net worth individuals, or traditional asset managers alike, where we provide a full scope of wealth management and asset management services, such as providing all kinds of asset management products, structured products, portfolio management, portfolio rebalancing, even down to as simple as fiat on off ramp and so on.
Great.
And, yeah, in terms of where we see ourselves positioned in the industry, I think what we do is quite fundamental as a piece of infrastructure for the industry, where I think we service as a bridge between the crypto native world, where things are evolving very fast, and you need a lot of both expertise and a dedicated team to both follow the newest developments in the space and the implications for investors and for users. On the other end, you need to sort of bring that to the broader investor world, where investor can better understand them, have the right tools and the right methodologies to invest into the space and manage that investment portfolio in a long-term way.
Great, thank you, Michael. And Darius, you're next.
Yeah, I'm Darius. I'm the founder of QCP Capital. We are a global crypto trading firm. We help our clients with institutional strategies and trading solutions in the crypto capital markets. We are one of the top market makers globally for crypto options and derivatives. Traded about 38 billion last year, about 13 billion year to date. So yeah, we specialize in primary market making, and also helping clients with various strategies. I think we also do a lot of strategic investing, and we own some key pieces in the derivative space, shareholders of companies like Darius, Paradigm. So that's us in a nutshell.
That's great. Thanks for sharing. So look, let's get into the crypto trading landscape. And I want to structure this in 4 parts, right? So first, I kind of want to focus on what we're seeing in the last 6 months up until today. Then talking about the evolution of the trading ecosystem and the infrastructure. And then it would be great to get some insights on what sort of trading activities are popular in these types of markets that you can share. And then finally, we can talk about the future outlook or a little bit of predictions. So first, let's talk about the elephant in the room. Right now, we are seeing drying up liquidity. Exchanges are posting the volumes are down, volatility is low. The reg story in the US is not positive. And honestly, we're still in a bear market, right? But there are some green shoots here and there that we're seeing. So I'd like to maybe start with you, Darius, and then after Michael. Is there any truth to what I'm saying? Like, what are some of the trends that you're seeing over the last 6 months?
Look, we are coming to the 1 year anniversary, I think, or just past the 1 year anniversary of Luna's collapse. So the last 1 year in crypto has been one of the most interesting times, and the last 6 months, doubling up on that as well. But I would say, in spite of all the crazy tail events that have happened, black swan events that have happened in crypto, I think the last 3 months has been very, very significant for the crypto narrative. So yeah, I'm registering all that you're saying, but I just want to make one point that the weekend that we saw Silicon Valley Bank, Signature Bank, effectively collapse. I think most people are not registering or internalizing the significance of that crypto narrative where we had panic in traditional markets where nobody thought, nobody imagined situations where Americans would be queuing outside banks to withdraw deposits. At the same time, we saw a rush towards Bitcoin as a safe haven, right? I think it's a bit under the surface, but it's very important that we recognize that in the minds of the finance world, Bitcoin is no longer a sideshow. I think Novogratz sort of tweeted this, and he said, suggested that Bitcoin is a sovereign CDS. But having a asset that's independent outside of the traditional financial system, the mainstream financial system, as a safe haven bet, more than just digital gold, I think. But the narrative that there is safety in this independent asset, and that is moving from a frontier asset to an emerging asset, and eventually to a mainstream asset that is becoming a very firm part of the minds of investors around the globe. I think that's something very important to register. So in spite of all the difficulties, yes, we've seen regulatory pressure in the US more than ever before. But I think the bullish Bitcoin narrative is stronger than it's ever been before. So I think that's one green shoot. The second green shoot, I think, is outside of the pressure that we've seen from regulators in the West, that we've seen at the exact same time we've seen very positive sentiment from regulators in the East, right? In spite of all the problems in Singapore last year, the Singapore regulator is still friendly to crypto. We've seen Hong Kong open up in a very big way. I'm sure Michael can share a lot more about that. But Hong Kong, China has opened up in a huge way, and I think that's something that could be a game changer. So yeah, I think these two green shoots are very, very important.
Thanks, Darius. Michael, maybe you could opine and fill in some areas as well.
Sure. I totally agree with the points Darius mentioned. Right, on one hand, the failure of the likes of Silicon Valley Bank and sort of Credit Suisse really challenged a lot of fundamental assumptions about the traditional banking system, and therefore it sort of reinforced the thesis on crypto, especially on Bitcoin, as an alternative, as a diversification, or in some way as really in at least in some scenario the last safe haven. And we start to see investors, and that sort of links to the second point of Darius, that we especially start to see investors in Asia react very strongly to those events. There's a lot more interest in investing to crypto, or fundamentally learning about how to invest into the asset class after those series of events. And like Darius said, regulatory wise, I think the East now is sort of embracing the asset class a lot more, while the West is sort of take a more precautious approach, at least at the moment. I mean, things can change very quickly, but as of right now, I think not only there's a lot more investor interest in Asia towards the asset class, but also we start to see founders, some of the most innovative projects, crypto native investors also moving or at least spending more time in this side of the world. All of these are, of course, positive. But and within the asset class, we're seeing a lot more developments this year, a lot of new innovation, new layer ones, a lot of roll-up solutions. On the application layer, we see new attempts on GameFi, or recently, for example, on BRC20 and all of that. So the industry is always as innovative as it ever been, with all the talents and all of that. But back to sort of trading or investing or asset prices itself, unfortunately, I do think the likely driver for say the next bull run or whatsoever is likely gonna be more triggered by external macro factors rather than the internal industry developments. I think the industry innovations are fundamental to the long-term growth of the industry, but at the same time, I do think prices will turn only if the macro conditions start to change, and therefore investors have more confidence to actually piling capital in. As of right now, there's definitely a lot more new interest in learning about the asset class. Some are allocating, but for it to be significant and meaningful, I do think some kind of macro trigger, whether the Fed turning its monetary policy stance or some new geopolitical events, that's going to trigger that.
Thank you. Yeah. I definitely don't disagree with a lot of the points you made, and I think that there is a lot of wait and see, but green shoots too. So let's shift tack a little bit and talk about the trading ecosystem and infrastructure. Over the years we've been on panels together, both of us, and we often talk about how the ecosystem has been improving, maturing, iterating, and every year it's been about a different theme. Before it was reliable custody, then it was about trading tools, then it was about the prime brokerage, and then this clumsy idea of pre-trade funding, and then clearing and settlement. So would you agree with the idea that the market infrastructure or the ecosystem itself has been improving, or are there still major gaps that you see today which are making a big impact to your growth strategy or your ability to do business? Darius, I'll go to you.
Yeah, I think let me approach this in a bit of a side way. I mean the infrastructure has been improving for sure, right? I mean, there is a existing playbook in traditional finance, and the three of us are from traditional finance. So, we know exactly what pieces are needed for better trading, better settlement, and the works. I think the elephant in the room in this case is to address the fact that in the last year or so, the entire credit and credit market, rates market, borrowing lending market in crypto has been absolutely decimated, right? There are still pockets of leverage. I mean, there's some CeFi on exchange leverage, DeFi, over collateralized borrowing lending still exists, but we've seen a major deleveraging cycle, and we are not going to see a credit expansion cycle anytime soon. Confidence in terms of counterparty confidence is at all-time lows, yields are compressed, vol is compressed, but I mean, generally speaking, the rates market, I feel, is the biggest missing piece. The way it was built up previously, I think we can all agree, was a little bit problematic in more ways than one. So to me, the biggest question is how this rates market gets rebuilt. And as we know from capital markets, that the rates market is the heart of any market. We need the leverage to come in. You need proper systems there. for credit to be extended so that things grow as a whole. And that's not going to happen in crypto unless we solve this problem. So the question for me has been, and I think it's a question that's still unanswered, right? How this foreign lending market comes back, how this credit market comes back. Do we need the banks to get involved? Do we need a better prime brokerage system? So can current players step up to do that? I don't know. So, I think for our angle has been that the one market, while the rates market has collapsed, the one market that has been very robust has been the options market, which is where we sort of dominate. And that market has been robust. It's functioned well. The funny thing is, when we say when we price forward outright, we don't go to the rates market. We actually imply the forward rate from the vols, right? And which is a very roundabout way of doing things in capital markets. But that market has been secure. So I think that's what we are focusing on. But I think we are always on the lookout for how this rates market gets built up, and I think being involved in building up that rates market will have significant alpha as well. I'm not sure what you guys think about that.
Yeah, Michael, your thoughts?
Sure. I think what Darius brought up is very interesting. As you mentioned very correctly, there's clearly we've been through a credit cycle in the crypto space, a very quick one, but quick and volatile one, with a lot of credit expansion through all kinds of lending platforms to retail, then between counterparties, and the leverage piled on, or some even decentralized credit-based lending pools and so on. And then as over the last year also, given all the defaults, all the failures in the system, that was quickly taken out. Now I do think the rates market or the lending space still exists, and for institutional players, I think it exists in the form of leverage, right? I think there are a lot of guys now start to take leverage through prime brokers, and there are players who are willingly or have the expertise to sort of take that counterparty risk on behalf of their clients and provide credit that way. And then, of course, on venue, all the derivatives, all the margin trading products are still there for the more sophisticated players to take some leverage when it's needed. On the retail front, similarly, there are still the high leverage perps and all of that. But on a broader level, I actually think a sort of a less expensive credit market or less expensive leverage system at this point for the industry is not necessarily a bad thing. I think the curves are still going to be priced one way or the other, whether it's through the option vol curve, forward vol curve, or through I don't know, rates market whatsoever. But at the same time, I do think the industry, given its volatility, given most of its participants are still private company with unfortunately a lack of transparency and oversight, maybe the industry is not ready for the kind of credit expansion we saw in the last cycle. And at the same time, even without leverage, you can still have a lot of both trading activities, a lot of proper investment tools to take advantage of this high growth industry and this very attractive asset class. And then other than that, I do think a lot of other I would say perhaps a bit slower, but perhaps as fundamental, if not more fundamental pieces are being built, right? Some of them are actually like you mentioned, Samar, they were brought up in previous cycles, but now they are back to attention and they're actually being built in the proper way. For example, the custody layer, right? Now I think a new trend is people, especially larger investors, larger institutions, are getting less and less comfortable with exchange risk directly, so they prefer to have a third-party custody set up where they can have their assets custodied by a third party in hopefully on-chain transparent way, but at the same time still have access to exchanges where the liquidity is. Also, on the DeFi front, with improvements on Ethereum, on all the scaling solutions, I think more and more decentralized venue will attract attention and provide alternatives to centralized exchanges or centralized counterparties. And other than that, I do think people are also building into more niche categories, right? Instead of generic landing platforms or generic landing protocols, right? People are building specific ones, some specific to NFTs, some specific to certain type of users and so on. So I do think the industry is maturing, and a lot more infrastructure is being built, but at perhaps a slower but more healthy pace.
Thanks, Michael. Yeah, I would agree. I had a question, Darius. You touched on options, right? So options was one of the themes of this year, right? Where we're seeing some innovation and growth, and even people are discussing now much more than they used to about structured products as like a follow-on product that comes out of that. And so my question to you is, we're still pretty nascent in this world, right? Because if you look at a more mature asset class, like options volumes are several multiples of that of the spot volumes, and what we see here is it's still a fraction, and then 80-90% of the volume goes through one venue, and so would you agree with what I said? And are there innovations and growth happening on the OTC side?
No, 100%. I think for a few things, right? The first thing here is that options tends to be the first stop for traditional finance guys very often when they come to the space, because imagine you're a old hedge fund, and you're very veteran in the traditional markets, and you look at the entire crypto space. Options is the one piece that you would actually understand quite well, because it is the exact same market structures as you see in FX or equity vols, with just a different underlying. So I think it's the first stop for a lot of guys when they visit the space. Of course, the high vols make it an extremely interesting trade as well. So I think we have seen a lot of big names from traditional finance, like the Brevin Howard guys, for example. They did one of the big first steps is into options, right? And the pieces make sense for them, because it's a plug and play essentially. And to that effect, I think this year what we've seen is our flow start to get dominated by fast money names, right? It used to be very the theme, customer base tends to used to be very crypto native or high net worth family office types. But this year suddenly we see a lot of fast money guys in the market, and they dominate the flow. So that's one theme. I think that is a fundamental change that is being forced to become more institutional, because the big volume players are traditional finance guys who are used to settlement and infrastructure in traditional finance. So essentially they are demanding and forcing infrastructure to be what they are familiar with. Everything from settlement to reporting, right? That's one thing. Second thing is, if you've noticed, in the wake of FTX, there have been several players that have emerged at the same time to compete with Deribit. So in the wake of FTX, we see Bybit, Binance, Bit.com, OKX all stepping up the options game. Suddenly there are many competing venues trying to get a big piece of the pie. I think the reason for this is I've spoken to the various founders of all these exchanges, and I think they see that even in a bear market in crypto, the institutional derivatives option segment is something that would be stable and continue to grow. And for that, to the effect, they are stepping up. I mean, we've even seen DeFi options exchanges like Avo, right, by the Ribbon guys, being established. I think this is a very big theme that we've seen, a very big development that we've seen. So yeah, I think the options, I mean, the piece is still smaller than the Delta One piece. I mean, it's still like 2% of the overall Delta One market. But I think that will change over time. especially with the regulatory, changes in the space. I think to that effect, we've seen CME options volume go up as well, because guys are being forced to trade there in spite of the more difficult margin requirements there. So I think that the pieces in the option market are changing quite quickly, and we will see this emerge as a big theme, I think, in the years to come.
Great insights. And Michael, do share what your views are on options. I don't know how much your firm is trading them, but I know personally that on the structured product side, I'm sure some of your wealthy clients that they find that product very useful. So keen to hear your.
Sure. Indeed. I mean, we are quite active in the options market as well, both as a market maker and also, like you said, a lot of our structured products very popular for high net worth or family office clients, of course, are originated with option pricing embedded. The market has developed quite a lot. I think now, we are looking at a relatively efficient price market, thanks to market makers such as QCP and ourselves, right, keeping the spreads a bit tighter than it probably would otherwise be. And at the same time, I think given I understand the comparison Darius makes between how in traditional markets option volume are multitudes bigger than spot or even delta one volumes, but that's not nearly the case in crypto yet. I do think there is a composition difference, given that this market is still, especially at this point, predominantly retail, and there is a learning gap for retailers to participate in the option space. However, indirectly, knowingly or not, a lot of them, if they have access to structured products, they're participating in the option market already. Similar to, I guess, similar to the spot market or the derivatives market a few years back, I do think there's still a lot of infrastructure to be built for the options market in crypto. For example, I think all of us, as much as we like Deribit as a team or an exchange, we do think, it's healthier, probably healthier if, our volumes are less concentrated and more spread out across different venues to eliminate single platform dependency. And also, on the DeFi side, there are new, I guess, decentralized option exchanges being built. But again, given the still niche client base and I guess just overall the system is already have a lot of ways to leverage. So I think it would take time for those to take off as well. Overall, again, I think similarly we need to be a bit more patient on things at this moment. They are definitely trending towards the right direction, and I think the right products are being built, if not already built. But it will take time for people to adopt to them, and it will take time for them to actually grow.
I think I just want to add a bit to what Michael just said. I mean, Michael and I were both in emerging market FX, from the 2010s, right? And we saw that market, the structured product, EM structured product market go from pretty much zero in 2008 to multi billions in by the time we 10 years later, right? I'm seeing the same patterns, same market structure, same kind of demand, where you have a frontier market, frontier asset class with very high vols, with very strange, settlement and very idiosyncratic behavior, and interest to earn yield or interest to express structured views on some of these things. I do see a future, the same path where in 5-10 years, won't be surprised where banks, from investment banks down to private banks, are issuing various types of notes, structured products with Bitcoin, Ether, or any other coin underlying, as the new in thing for all kinds of investors to participate in. So I think like Michael said, patient, but the pieces are in play.
Yeah, I don't disagree with that, by the way, and we are seeing the early stages of that, and we'll get to that question. I have a specific question around that and how the the average investor's profile will change or adapt from majority retail, like Michael mentioned, to more institutional involvement. But I had one question I wanted to ask first before we get to that part, and it's just around the current trading strategies. Look, I'm sure there are tons of people in the audience who are traders today. Maybe they are traders with their firms, or they are traders on the TradFi side, or they are private traders, day traders. Just curious if you can share in these current markets, what are some of the trading strategies that won't work and maybe will to deliver some kind of return to investors or end customers? If there's anything you can share from your own businesses.
I think Michael might want to start on this one.
Sure. It's an interesting question to ask because on one hand, of course, our market making team, our asset management team, they trade a lot. They trade billions of dollars every day, and they have sophisticated quantitative strategies to price things, to make markets or hopefully make returns. On the other hand, my advice to our clients, very consistently, both my advice personally and our stance as a firm is to not overtrade this market. It's very difficult to trade this market, frankly speaking. It's a lot easier to invest in this market. And what I mean by that is if you look at crypto, it's a high growth market, right? You pick the blue chip assets or a basket of them, likely over a few cycles, right? One or two. If you sit through them, you invest through them, you have tremendous returns, right? That's the easy part, or supposedly easy part. The hard part is actually, navigate through the volatility and all kind of risks involved, right? Because this is also a highly volatile and a new asset class. And to do that, the more you trade, the more likely you actually, you sort of suffer losses or even lose that position, lose that investment position. So unless you are, highly, I guess highly sophisticated as a trader or as a firm, right, then you will have clear strategies, of course, on your own design or on your own mandate to trade the market. But otherwise, it's easier to have a investment mindset, even when you are trading the market, which means, don't go for, short-term opportunities unless you are very dead sure about them, right? And, simple rules, right? Always play on the long side if you believe in the asset class. Shorting can be dangerous, right? Don't take leverage, or if you want to, right, manage them very, very well and buy the dips and hold on to them, I guess.
That's a very sagely advice from Michael. And I mean, just to add on, I completely agree with all his points. Just to add on, and sort of illustrate a bit of these things, the best performing asset in the last couple of weeks is probably the meme coins, right? Like Pepe or ladies. You could have 100x your assets in the last few weeks, but it is also the worst performing strategy depending on which entry point, and which day you enter. So that's an illustration of how volatile this market can be, and you can have very, very degen strategies, right? They call it, in the more far out assets. But in general, I mean, I would say that the investment landscape in crypto has changed again over in the last 1 year. Could have made a lot of money, could have lost a lot of money. And I think it's not such a straightforward thing anymore, where you're just betting long. If you're betting long only, you might have to be a bit patient and wait. In the last couple of months, short vol strategies have probably worked very well. The few months before that, they did not work well at all. But in general, I think, from a vol perspective, being long the tails tends to work. It's a high convexity trade, and crypto is a high convexity asset, right? And right now the vols are at historical lows. So if you would ask my advice right now, being long vol, I think it's a decent strategy, good risk reward. I think short-term momentum strategies tend to work in crypto. Long only, I guess it's a decent strategy as well, but you have to sit through all the volatility. I think alpha strategies are getting more and more sophisticated in crypto. It's no longer just a simple story. So I think do your homework, do your back testing, and And there are opportunities for alpha in crypto. Just got to make sure that you manage your risk.
Thank you both. Super useful. There's some sagely advice for maybe less sophisticated investors, and then there's also some ideas for more sophisticated investors or quantity type shops. So thanks for sharing both. As we run into our last 7 or 8 minutes of the panel, I kind of wanted to round it off now and start looking towards the future and maybe making a little bit of predictions on themes. I think the first question, I only have 2 questions, but the first question I have was, we talked about the profile of people who are investors in this ecosystem and traders, and sort of, what steps do you think need to be taken now to either create more mainstream adoption or especially institutional adoption, given that all of us stand to benefit as we try to professionalize this ecosystem and bring more institutional flow in. So what are the steps needed, do you think, and how far away are we from that? This is kind of like some of the future trends that I would like to talk about. And maybe we go with Michael first.
Sure. I think like we discussed earlier, the pieces are pulling together, infrastructure, right? Companies like Talos, for example, provide great trading systems for firms, more sophisticated institutions to sort of access the market at one point. Market makers like ourselves or QCP, where institutions can face to have bulk liquidity or a variety of products. I think things like that are there, or custody layer, like we mentioned, right? Right now, where are we? What we are missing, or what we need to progress forward, are, I guess, sort of bridging. I think a lot of the most effective infrastructure in this industry are crypto native, right? But by being crypto native, they're effective, but they sort of still need to be fine-tuned to sort of be plugged into the more traditional investor base, right? There are also companies that sort of focus on servicing the traditional institutions or traditional investor base, but they are not crypto native enough in a way that their solution is still overly similar to the legacy system, and sort of cannot handle a lot of the changes or a lot of the uniqueness of crypto. So I don't think it's technologically hard to have both, but it is I think something that a lot of companies in the space need to work towards, right? The crypto native ones, they probably need to be a bit more spend a bit more resource on I guess things like licensing, where they can get through the door or tick the box for a lot of traditional investors. Things like I don't know, things like being more regulator friendly, things like investor education or sort of client experience that are a bit more watered down, right, compared to the highly degen ones, right? On the other hand, I think there are a lot of every cycle there are new startups that started by TradFi folks, like we were before, right, a few years back, that focus on that client base, but then it probably will take them time to actually get crypto and get what's actually working, what's not. So I do think there's this bridge to be bridged, but I don't think it's hard. It's just it takes time again, and it takes the right kind of team to dedicate to that.
Great.
I don't have too much to add to what Michael has said. I completely agree. Actually on a bullish note, I think that all the pieces are in place. This is an extremely interesting time for crypto. I think for both natives as well as new investors. I think it's an extremely interesting time for crypto. We've had our .com bust move last year. I think that all the pieces are in place. We have good players in the space, good infrastructure. It's a matter of like Michael mentioned earlier, a bit of macro factors. Some crypto native factors as well. Getting the rate speeds in place, but most of the pieces are in place. And I think as we move into the Bitcoin halving next year. It's going to be a very interesting time for all of us.
Cool. And then my last question, and it's kind of like a one-liner. Like what excites you and what scares you, maybe for the when you're looking forward like 1 year? Michael first.
Sure. I think what excites me is still the innovativeness of the industry. I mean, I simply I guess we've been in the industry for like what, almost 3 cycles. I still cannot predict, what's gonna be the next hot thing, right? There are a lot of theses, a lot of trends and all of that, but exactly next month, what's gonna be hot in crypto, it's so hard to predict because it's so innovative and it can come out of nowhere. Now, what scares me, on the other hand, is actually the industry is still niche. And therefore, despite all the innovativeness, despite how cool, we all feel about what we do, its growth still rely a lot on external factors, especially external macro factors. That could turn in our favor or that could not. And that is still yet to be observed, how the Fed will actually act, right? Policymakers, policy stance, those things I don't think we can control.
Great. Darius.
Quick one, yeah. As a vol trader, what scares me is the vol continuing to trickle lower, but I'm pretty sure that we're gonna get a snapback up in vols at some point. And what excites me is more and more players getting involved, right? It's a very clear path for me of crypto going from this frontier asset class towards a mainstream asset class, and very happy to be on that journey with you guys.
Yeah, thank you. And so look, as we wrap up, I just wanted to say a big thanks to our panelists for their time today. Michael, Darius, thank you so much. Also to our hosts, SCB, 10X, and Bloomberg. We really hope it was an interesting and useful panel for you all in the audience, and see you all back on the outside. So thank you and goodbye.
Thanks.
Thank you.
Thank you. Bye-bye.